Welcome to the panel entitled Investing in Community, Minority Banks and Community Development Financial Institutions. My name is Hope Knight, and I am President and CEO of the Greater Jamaica Development Corporation, and I am honored to moderate this panel today. I would like to take this time to introduce the host of this panel, Congressman Gregory Meeks, serving as the U.S. Representative for New York's 5th Congressional District since 1996. Representative Meeks is a senior member of the House Financial Services Committee, where he serves as chairman of the Subcommittee on Consumer Protection and Financial Institutions, which oversees all financial regulators such as the FDIC, Federal Reserve, and all matters pertaining to consumer credit and the stability of the banking system. He previously chaired the Financial Services International Monetary Policy Subcommittee and was the conferee of the Dodd-Frank Wall Street Reform Act. Congressman Meeks also serves as a senior member of the House Foreign Affairs Committee, where he serves as an influential member of both the Subcommittee on Europe, Eurasia, Energy, and the Environment, and the Subcommittee on the Western Hemisphere, Civilian Security, and Trade. Representative Meeks earned his bachelor's degree at Adelphi University, and his law degree is from Howard University. He is a member of the Allen AME Church in St. Albans, New York, and a member of Alpha Phi Alpha fraternity. Congressman Meeks, I turn this over to you.
Thank you, Hope. And before I begin, I want to first congratulate the Congressional Black Caucus's Foundation and all of its staff for the excellent work done to ensure that this important annual conference move forward and to be a tremendous success. And that's despite the unique challenges of the COVID-19 pandemic. I also want to thank all of our panel of experts, and that's what they are, for their contribution to today's discussion and for working and supporting CDFIs and MDIs, minority banks, which play an absolute crucial role in communities of color and underbanked communities more broadly. And I especially want to thank you, Hope, our esteemed moderator, who has been a true leader in New York City in mobilizing investments to communities of color and helping to address the devastating impact of redlining and disinvestment in minority areas of Queens County, and before that, Harlem, New York. I've had a privilege, it has been my privilege, to work closely with you in your role as President and CEO of Greater Jamaica Development Corporation, and I have seen firsthand how coordinated work between city officials, the private sector, community groups, and minority banks, and of course CDFIs, can revitalize neighborhoods, support local small businesses, and enable home ownership and wealth creation for minority and underrepresented communities. You know, Black, Hispanic, and Native American communities have borne a disproportionate burden of the COVID-19 pandemic, whether measured in infection rate, loss of life, unemployment rates, or loss of income and wealth. People of color have been deeply impacted by the pandemic. This is especially harmful as communities of color and the Black community in particular have also lost more, faster than any other community during the past financial crises. And the Black community had not yet recovered from that financial crisis when COVID-19 struck. The legacy of redlining and financial discrimination continues to this day and makes our communities especially vulnerable to financial and economic crises and negatively impact the financial resilience of local businesses and families. For context, my office conducted a study of Queens where we mapped the location of every bank branch against population demographics and income in every zip code in the county of Queens. The findings, which I published in an op-ed in the American Banker, found that zip codes with predominantly Black and Hispanic populations have 7 times fewer bank branches than predominantly white zip codes. And many have no bank branches at all. And this is true even when adjusted for income, as high income Black and Hispanic zip codes also have far fewer bank branches than non-minority low income zip codes. This is indeed the legacy of redlining that echoes to this day and perpetuates disinvestment in our communities and stifles homeownership, entrepreneurship, and wealth creation. CDFIs and MDIs are critical to reversing these trends. CDFIs are certified by the Treasury Department and held to high thresholds for serving low and moderate income communities, and many focus on underbanked communities of color. The CDFI fund supports these financial institutions with grant programs, technical assistance, and access to capital, which gets reinvested in deserving communities, which are far too often overlooked by traditional capital. Similarly, minority banks tend to operate principally in low and moderate income communities and underbanked communities of color. FDIC data confirms that Black banks, for instance, are more than twice as likely to operate in low and moderate income neighborhoods, and similarly more likely to bank and offer mortgage and business loans to minority borrowers. But unfortunately, minority banks remain far smaller than their non-minority peers, representing only 2.8% of FDIC insured banking charters and 1.3% of assets and 1.7% of banking offices. When it comes to redressing redlining, decades of disinvestment, and ensure equal access to financial products such as small business loans, mortgages, and other financial services, minority banks and CDFIs are our nation's most effective tools to reach low and moderate income communities and communities of color. That is why Congress carved out $10 billion of the PPP program to be lent out by MDIs and CDFIs. It is also for these reasons that my focus since becoming chairman of the Consumer Protection and Financial Institutions Subcommittee has been squarely on issues of banking discrimination, redlining, and supporting CDFIs and minority banks. It is also for these reasons that Congress has made it a top priority to ensure that we protect the Community Reinvestment Act from dilution under the guise of modernization, as this civil rights era law is critical to ensuring that banks invest in the communities where they bank and be held accountable for any redlining practices. I am proud to have introduced and led key legislation that advocated bold ideas in the area of financial services. This includes authoring the most ambitious bill in decades to support, strengthen, and ensure access to capital and deposits for the nation's minority banks. I was also proud to work with Senators Warren, Schumer, Harris, Booker, and my chairman of the Financial Services Committee, the Honorable Maxine Waters, to introduce the most ambitious legislation in a generation to support community development financial institutions. Investing in CDFIs and strengthening the overall CDFI infrastructure nationally is one of the best ways we can invest and we can make the investments that we can make today. As these institutions crowd in capital and invest in the most impacted, vulnerable communities, have a positive multiplier effect and allow communities to build wealth and financial resilience. I very much look forward to our discussion today and discussing not just the challenges that our communities face, but also the practical solutions and examples of how MDIs and CDFIs are transforming communities and helping mobilize capital to the hardest hit communities of color. And we'll do so with a most distinguished and expert panel today. So thank you for joining us. And I look forward to having a very, very good discussion today. Thank you.
Thank you, Congressman Meeks. As I mentioned earlier, I manage an economic development organization focused on economic expansion and creating opportunity for the people and businesses of Southeast Queens. As the Congressman mentioned, Southeast Queens was hit particularly hard by the pandemic and disproportionately suffered some of the highest infection rates in New York City. The community is geographically adjacent to JFK Airport, and the local economy is inextricably tied to the airport and airport-related services. Local businesses that are tied to this ecosystem have suffered steep revenue declines. The Greater Jamaica Development Corporation and its CDFI have spent a significant amount of time supporting these businesses and others during the last 6 months and directing them to resources provided by both government and the private sector. You've also been able to underwrite a fair number of loans to emerging young businesses that have been able to access opportunity that have evolved as a result of the pandemic. None of these businesses would have been eligible to access capital from traditional financial institutions. So we know that there is of critical importance for there to be alternatives for young businesses to access capital, especially in communities of color, which is at the heart of the discussion today. And so now I'd like to go to our panelists for some opening remarks. I will direct you online to the website to review the bios of this group of esteemed panelists so that we can spend more time talking about the topics of the day. And with that, I would like to start with Aaron Betru. He is the Managing Director of the Center for Financial Markets at the Milken Institute. Aaron?
Thank you for that, Hope, and thank you for moderating the discussion. Representative Meeks, thank you for your leadership, as well as the Congressional Caucus Foundation for hosting this session. My name is Aaron Betru. I'm the Managing Director for the Milken Institute Center for Financial Markets. And for those of you that are not familiar, the Milken Institute is a nonpartisan, nonprofit policy institute. And within our team, we're looking at how do we use financial markets, products, services to help address large challenges. And within the construct of access to capital for minority communities or the nation at large, this is probably one of the most important things that we could be doing, because it not only matters for the community, but given how important the minority population is as a growth for the country, it's actually very important for the country at large. And from my perspective, the past couple of years, we've been looking at the space of minority depository institutions under a couple of different lenses. One, a big part of advancing the community as well as the country is making sure that there's job creation, wealth creation, and making sure that small business is a huge driver of both of these things, have the tools that they need to hire from the community, make money for themselves, but for their families. And we know, historically speaking, this segment has been capital starved, especially minority-owned small businesses. And they've been capital starved, and I'll just share some statistics. There's been quite a few mystery borrower programs when a minority walks into a non-minority depository institution and a national bank. They're twice as likely to experience hurdles in obtaining financing and twice as likely to not get the help to overcome those. So that we end up effectively just self-selecting to not go into financial institutions. And without that capital, you don't grow, you don't hire locally, you don't actually contribute to the economy, both for your community as well as the country. Well, minority depository institutions, it isn't that they are deliberately overemphasizing helping minorities, they just happen to be in the neighborhood. When a large bank, it's only 30% of their footprint that ends up being minority, but for a minority bank, it's more like 75%. So they understand them, they know what their needs are, and they're better able to serve their needs. And the end results end up being quite an important thing. Unfortunately, as the representative spotlighted, they've been hurt significantly post-2008. And where we're at right now, we're actually have had a massive increase from 2000 to 2008, the number of banks, but that bank from 2008 to 2019 decreased significantly. And where we're at post-COVID, we're going to be experiencing a moment where we need to be helping this constituency to turn around. And I thank the leadership from Representative Meeks and others on the Senate side for pushing different pieces of legislation. I'm looking forward to discussing what those are and other things we should be doing.
Thank you. Next, we will have Lisa Mensah. Lisa is President and CEO of the Opportunity Finance Network.
Thanks, Hope, and thanks to Congressman Meeks and my colleagues for this important discussion. Appreciate the chance to be here. I think I'm here to say a little more about what the CDFI field is and why we matter and what kind of solutions are at play to help us do our work even better. So this community development financial institutions field is about 40 years old. Many of our institutions were born out of the civil rights movement. We're born to be lenders, but lenders with what I call capital plus. Lenders who take their money, loan it for small businesses and housing and critical facilities, but also more than capital providers. They take time with borrowers, and they can often take on risk and take more time. So that's what we are good at, this CDFI field. We're now a field of over 1,000 institutions. 300 of them are members of my organization, the Opportunity Finance Network. And we've grown to a field that has 222 billions of assets of dollars under management. So we're no longer just tiny. The key about our field is that we were able to be responsive. Recent experiences, such as the ones that Representative Meeks discussed with the Paycheck Protection Program, brought into focus what so many of us already knew, that mainstream finance just doesn't reach many of the communities that were in need. When the first round of PPP loans went out, they couldn't reach everyone. And so the set-asides that Congressman Meeks established helped us reach deeper into our communities. So we've seen an amazing public recognition over the past months that we need our MDIs and our CDFIs, and that CDFIs are a proven solution to delivering capital in underserved areas. It's an industry that's committed to trying to solve today's pressing issues, like persistent poverty, like unequal access to housing, like what are the obstacles that minority-led small businesses face, and getting more access to fair and responsible finance. So I like to say we lend where it counts. We're here on the ground every day to support our communities. So now that you know a little bit about what CDFIs are, let's go to the solutions. What must we do now? And here's where I think we've learned from the 2008 recession. We've learned that our Black and brown communities will be hardest hit in times of economic distress, and that we need to start now to get capital into these communities and get ahead of the coming crisis. We're still in crisis, but the recovery will be longer if we don't equip the institutions like CDFIs. And here's where I think this session is so important, because it gives us a chance to say why we're so critical to the recovery. We CDFIs can not only help mitigate the impact of this current moment, we can also start to move the needle on the growing racial wealth divide. To do that, though, we need more capital, and we need the help of both the public and the private sector. And this is where I want to speak for a few minutes about the kind of solutions. Over the past few months, we've seen the private sector step up in a major way to support CDFIs, and especially CDFIs focused on community of color. We've seen partners like Google, like Netflix, Lowe's, and billionaire Robert Smith committing real resources to closing the racial wealth gap. But to amplify these partnerships, CDFIs need the federal government to also step up in a major way. And here's where investments that have been called for, like the ones Congressman Meeks and Chairman Waters spoke about, are so critical. They've called for investments to provide billions of dollars in new funding to the Treasury Department's CDFI funds. And this is so crucial. Bold CDFI funding will enable more private sector partnerships. We're a field of partnerships. We know how to work with the major banking sector, but we need the step of government resources too. I think the opportunity is to lean in now and to know that our communities are worth fighting for and that we know what to do. CDFIs recognize that building an inclusive economy is critical if we really want to realize America's true potential. We can't afford to have an economy that ignores the needs of millions of people. And we're a mechanism to make sure we reach all of America. There's more to say, and we'll be getting to that. So thank you for the chance.
Thank you, Lisa. Next, we will move to David Clunie. He is the Executive Director of the Black Economic Alliance.
Thank you, Hope, and thank you, Congressman Meeks, for having me. Thank you to the esteemed panel I get to speak with, and to the Congressional Black Caucus Foundation for putting this on. So the Black Economic Alliance is a coalition of Black business leaders committed to improving economic mobility for Black folks, particularly focused on work, wages, and wealth. And we are, I'll talk about a couple things as we set the stage, and then look forward to getting into the discussion. Just a little bit of drilling down. Lisa talked about the CDFI community and industry. I'll talk a little bit about Black-owned banks among other minority depository institutions. So Black-owned banks is a small but important industry. They're typically smaller in asset size, considered community banks. And they're really just a source of financial support for Black communities. And they focus on lending for things like small business, nonprofits, Black home buyers. And unfortunately, over the last almost 20 years now, really since 2001, the number of Black banks has significantly decreased by over 50%. And so now, while they're serving this critical role, they only account for less than 1% of lending to Black home buyers and a very small percentage of the market, of the financial services market writ large, as Congressman Meeks talked about at the outset. So thinking about the opportunities with Black-owned banks and other minority depository institutions, they played such a central and crucial role in the response to the 2008 financial crisis, really stepping in a space when a lot of other banks pulled back, particularly on home lending to Black folks and in Black communities. One of the challenges is that they have very limited capacity due to the number of banks, which, and others can keep me honest on this, I see hovering around 20 Black banks right now, and also just limited in terms of their ability to loan and loan sizes. But I think Congressman Meeks talked a little bit about some of the efforts that have been made in recent time. He has been a real leader, both elevating the conversation around the role of CDFIs and MDIs, but also trying to get very needed resources to this community. And I'm encouraged by some of the work that he's done with the bill he's put out recently, as well as House Financial Services Committee Chair Maxine Waters and the Jobs and Neighborhood Investment Act coming out of the Senate as a companion. And I hope those efforts can continue and we can make some just transformational progress in the way of resources for hopefully billions of dollars for this industry to help continue to lend and serve the critical function they do with getting capital to communities of color and to people of color. So thinking about the role that this community, both CDFIs and MDIs, played in response to the financial crisis of 2008, one metric I look at home loans. Larger banks really started to pull away from, well, first of all, larger banks right now originated about 80% of mortgages to Black communities back in 2007, right before the financial crisis. And that's, you compare that to 2018, it's just about 42% that large banks are originating loans to Black communities. And that's a particular space that this industry of CDFIs and MDIs has stepped into when the larger bank community was pulling away. And really, you think about the role that CDFIs and MDIs play in wealth building. Small business creation and home ownership have been the two largest builders of wealth for American families. And those are two particular places where CDFIs and MDIs play an absolutely crucial role in getting capital to the communities that need it the most, and also communities that have, I think, the most challenges, particularly Black folks, getting financing from traditional banks, as Aaron talked about a little bit earlier. So I'll say to close, and I look forward to getting into the conversation, CDFIs and MDIs play such a crucial role. And as we think about how we can learn from lessons of the past, I think not only about the 2008 financial crisis, but also the Great Depression, and how both of those events brought about the largest allocation of assets in two generations, really. And the way it was done after the Great Depression is I think, an example of what not to do in wholesale cutting out groups of people, particularly Black folks, from the government programs that are meant to build wealth and regrow the economy, things like redlining and otherwise. But also in the Great Recession, 2008 and beyond, avoiding repeating some of the same mistakes where we knew where the needs were, but we basically pumped money into infrastructure that did not allow for access for a lot of folks to get the resources they needed to the places where they were needed the most. And I think the Paycheck Protection Program is an example of that this time around. So we need to be very targeted and deliberate about how we are allocating those assets in a much more inclusive and equitable way. So I look forward to talking about that and the role that CDFIs and MDIs play in that process.
Thank you, David. Next, we'll move to Ted Archer. Ted is Executive Director, Global Philanthropy, JP Morgan Chase.
Thank you, Hope. And thank you, Congressman Meeks, and for the Congressional Black Caucus Foundation team for organizing this panel at CBC. It's a real privilege to join this discussion alongside some of the foremost leaders working to address economic disparity in this country. My name is Ted Archer, and I head global efforts supporting small business expansion at JPMorgan Chase Foundation. Our initiative, Small Business Forward, focuses intentionally and has for years on unlocking opportunities for marginalized business owners, but in particular entrepreneurs of color, where the gaps are widest and the opportunity for impact is greatest. It's in this continual search for impact that we've been sharpening our model for collective action that brings together the strengths of our firm, including research, policy, capital, and philanthropy, and joining that with the expertise and reach of CDFIs and minority depository institutions to tackle a number of the drivers of economic opportunity, including housing, financial health, business ownership, and job creation. And zooming in on business ownership for just a moment, while we know it's a proven vehicle to generate wealth in the Black community, as David alluded to, we also know that Black-owned businesses skew smaller and are underrepresented among businesses with employees. Relatedly, the CDFIs and MDIs and support organizations most proximate to Black-owned businesses are themselves underinvested in and face challenges when it comes to economic security and weathering financial shocks. Black wealth itself is on a downward trend to be zero by 2053, only exacerbating the disparity which acts as a drag on our economy. Yet this disparity reveals an opportunity and a call to action. For example, if people of color own businesses at the same rate as white counterparts, we would have 1 million more businesses, 10 million more jobs, and over 300 billion more in income. And for example also, as Kenneth will talk to, David spoke to already, Aaron and Lisa mentioned, if MDIs and CDFIs who already do more with less had access to greater resources to support their growth, they could contribute even more to the long-term viability of underserved communities. A great many banks, including Chase, have financial relationships with CDFIs and MDIs, often through the Community Reinvestment Act for credit. While CRA is an important incentive structure, no doubt, I'm proud to say that JPMorgan Chase has been partnering with CDFIs and MDIs over years beyond transactions. Along with other financial institutions and corporations, however, we'll need to partner and create new models and incentives, as well as build on existing best practices to further enable the broader ecosystem of MDIs and CDFIs. And I'll quickly just share a few. 5 years ago, we launched an Entrepreneur of Color Fund initiative that in particular exemplifies the innovative power of partnering with MDIs and CDFIs to lead the way. Over the last 5 years, we've joined up with other banks and investors and 13 CDFIs across the US to produce $50 million in lending to over 500 small businesses owned by Black and brown people, with a less than 2% default rate pre-COVID. 3 years ago, we embarked on a research initiative with the National Bankers Association, the Milken Institute, and the Rockefeller Foundation, laying out original research on the landscape of MDIs and identifying how MDIs are efficiently doing more with less. This research underpins much of what we understand today about the potential that MDIs have as a sector for greater impact. Last year, JPMorgan Chase announced participation in the Department of Treasury's Mentor Protege program with 2 Black-owned banks, Liberty Bank and Harbor Bank. And we're ready to take the lead in developing how a public-private partnership like this can serve as a blueprint for how MDIs and larger banks should comprehensively engage to scale and improve our banking system. It's with this kind of a track record that's led us to work directly with Harbor Bank and Combs Enterprises to help Black-owned businesses access SBA's Paycheck Protection Program, and also this track record that allows us to advocate for CARES Act policy changes and also to create greater access to the Paycheck Protection Program and the carve-out that Congressman Meeks mentioned around CDFIs and their ability to participate to reach more Black-owned businesses. It remains incredibly important to continue to name the problem, which is why we will build on multi-billion-dollar initiatives like advancing Black pathways, financing affordable housing in hard-hit cities, and also supporting minority-owned businesses through initiatives like the Entrepreneurs of Color Fund. It's now more than ever that we recognize just how important it is to preserve the gains that our communities have made since the last recession and over the last decade as the world now awakens to the growing disparity laid bare by COVID-19 and also social activism. But we don't just want communities to recover to the status quo that was precarious to begin with. We need to design and build a sustainable future. CDFIs and MDIs have a unique and important role to play in generating economic opportunity in the nation's most distressed places, and expanding their reach through collective action will bring new sources of capital into these communities that lack access to financing. This is also why understanding our own role in the ecosystem is so very vital, and partnering with CDFIs and MDIs is so important. To solve these systemic problems, it will take long-term commitments from institutions like JPMorgan Chase, our government officials, and leaders like those represented on this panel. And I can't say this enough, we need to be in this for the long haul. Corporations need to take up residency and cannot be tourists to the economic justice and racial equity space with MDIs and CDFIs. Instead, stay focused on the goal of enabling the sustainability of institutions that are the backbones of the Black community and other underserved communities.
Thank you. And next we'll move on to Kenneth Kelly, Chairman of the National Bankers Association.
Thank you, Hope. Thank you, Representative Meeks. We really appreciate your leadership on this topic. You have been such a warrior on this topic. We just want to say thank you. And to the Congressional Black Caucus, you have been doing this for many years, being sure that we are aware and informed on the issues that are important to our community. So on behalf of the National Bankers Association, I just want to say thank you for having us. The National Bankers Association has been around since 1927. 93 years we have been representing minorities in the banking sector across this country. And no time like before is a great time to do that than now. When you think about African Americans in particular in America, there are a couple of things that come to mind. One, economics. Two, politics. And three is culture. The glue to that has been money and capital. And we need capital into our systems to be able to help do all of the things you heard my colleagues talked about in so many different ways, whether it's the housing gap that we've talked about, net income gap, business growth, et cetera. Capital has been the lubricant of that. And so when we think about what's going on with this pandemic, we're seeing the social injustice, but we're also seeing some economic injustice. Now is the time to do the three things that I think is very important for all of us to take hold of. One, become aware of the issue. Two, engage in these issues. And three, take ownership of these issues. So when you think about CDFIs and MDIs, I think all of us have to take on the responsibility and the wherewithal to say, we're going to make things better for the next generation. Just a little historical cap on what's been going on. When you think about African Americans in particular, you go back to the Freedmen's Bank that was created 155 years ago. And you see the tendency for ups and downs economically for African Americans throughout the years. With the social unrest in the 20s, we saw banks start. With the social unrest in the 60s, we saw banks start. In fact, our bank, First Independence, started as an outcome of the 1967 riots in Detroit. And now here we are in 2020, and we're talking about economics. Now is the time for all of us to figure out how can we engage in such a way that the outcomes in 2030, 2040, 2050 will be very different. You see that in the groundwork of the bill that Representative Meeks has held and put forth before Congress. We need your support on those three things that I just asked about. One, awareness of the bill. Two, engagement on the bill. And three, ownership to ensure that Congress knows and hears from this constituency that this is important to the African American community, in addition to the Hispanic community and Asian community and Native American community that we all support. So it is very important to this audience and all of us that we engage hand in hand in moving forward these issues, because it is not just for us, but it is for all of those who will come behind us. So on behalf of the National Bankers Association, we are proud to represent the banks that we represent across this country, and want to say thank you for listening to us, hearing the need for economics, politics, and culture by engaging in being aware, by engaging in being informed, and by engaging and taking ownership of these issues. So thank you for having us.
Thank you. And thank all the panelists for their work in this effort. And I want to just start by asking a question related to the fact that if CDFIs, MDIs, credit unions can manage to lend to people of color, can larger banks follow the model to increase lending to the same borrowers?
So I'll start answering that question and say, you know, one of the major differences I think between the mission of CDFIs, MDIs, and credit unions and banks is profit. Banks are largely driven by returning profit to their shareholders. The main difference between a bank and a credit union is that they are there to provide a service to their members, and they don't have shareholders who they're driving profit to. And a lot of smaller banks, community banks, but particularly minority depository institutions and CDFIs, take on a higher level of risk and will make loans at a smaller dollar size at a higher cost of capital for them. So there's a major difference in the industries. And I think, as Ted talked about, I think there needs to be a shift in the objective of banks getting involved in some of the communities they're in. And I think JP Morgan Chase has made some very good examples of doing that, that is driven at the mission of providing a service to communities that need it and closing that wealth gap and opportunity gap, instead of it being solely driven by profit.
If I might jump in a little bit here, we actually looked at this question of actually what's going on. Yes, at the end result, the representative and David hit the point. We see more lending in the community at the MDI CDFI level than we do with the national banks. But let's actually answer the question. If they've been so small and declining over the years, isn't that a result of the fact that they're inefficient? And so we said, let's actually do an analysis, a quantitative analysis, compare minority-owned banks versus non-minority banks and their return on assets. And what we discovered when we looked at it empirically was there's actually zero differential between minority-owned banks and non-minority banks. It's within an asset band. So that's a very critical point, right? So within an asset band, the vast majority of being below $1 billion in assets, when you compare them to other small banks below $1 billion in assets, there's zero differential. Of the 5,000 plus other banks, which are much larger in scale, you get economies of scale of being a higher point. So it's not a question of whether or not these institutions should be quote unquote turned around, it's scaled up. And that's what makes the different pieces of legislation quite critical. And so there is what I would describe as information asymmetry on the value of serving the minority community and the value that the MDIs themselves have. There's a perception that being a bank that is in the Black community or another minority community can't turn a profit. The issue is more, how do you get them to at a higher scale where their return on assets ends up being comparable to the larger banks? So that's a nuanced point that I think investors usually miss out on. And as a result, a lot of investment capital doesn't go to the MDIs when it absolutely should.
And let me chime in on this. And I talk about economics, politics, and culture because it's so important. When we talk about economics, we think of the cash itself and managing to the shareholders. But the reality is it's policies that help shape those outcomes. You heard Ted talk about CRA, and you heard some of the other regulatory issues. We have to get engaged in those to help shape those so that we get outcomes. The culture, whether it's MDIs or CDFIs that are not getting funded, is a reflection of the policies that are in place that allows for the economics to come out of the backside of it. So we have to be, again, aware, engage, and take ownership of these issues, because if the people push for this, as Aaron just talked about, then we'll see those outcomes change. Otherwise, we'll continue to see the benefit of those who have engaged in the economics and politics to get the outcomes that they have. And we saw that play itself out through the PPP in itself.
And Hope, if I may, I would just chime in to reinforce what everyone's already said. David, Kenneth, and Aaron in the how-to. Some of it is engagement with our policymakers, kind of rethinking what we have in terms of a profit motive or expectation. But Lisa mentioned something earlier with respect to what CDFIs and MDIs do now, and that's capital plus. And so much of what large banks can and are learning from CDFIs is how not just to reach communities of color, but how to do more than just write the check and provide the capital. And it's an ongoing relationship to understand what business owners need that's going to result in the ability to drive capital and have that capital repaid to get to those profit levels. And there's no better industry that we can learn from that's doing it now than CDFIs and MDIs.
Are there other segments of the financial services industry we should be considering when we talk about equitable access to capital and democratizing financial institutions?
I'd like to speak a little bit on that because we've seen, and anybody that's around a young person, we've seen the rise of fintech and we've seen the changes that have happened. People move money on their phone more often than they may go to a branch. So I think there are different segments of this, but here's what I think this moment reminds us. There's one thing to transact. There's another thing to be able to build wealth in our communities. And this is where I think we need broad responses. I'm confident that Congressman Meeks and his team have their eye on the newer aspects of the financial industry. But the reason we need to coexist, the CDFIs, the major banks, and the new players in this, we need to coexist in order to reach and build wealth. The typical fintech isn't even seeing directly the customer and isn't going to take the time, the capital plus that Ted mentioned, to go work with a small business owner. They'll have an algorithm, it'll tell them whether or not to make the credit. And yet we're not going back. No one's going back. So I think the moment reminds us that while there are sectors here, credit unions, fintechs, other aspects of the financial industry, we need each other. And we need the policymakers to support these levers that are going to pull us all up. We are not finished. And I think part of what we've spoken to in this panel is this deep history. We're fixing so much here in 2020 that's been our legacy for the 100 years that Kenneth is talking about. So we're fixing a lot. So while there are other aspects of our financial industry, I think we better keep our eye trained on where are we going to pull forward our communities. And that's where nobody needs to get rid of big banks or fintechs or big credit unions. We need us all, but we certainly have proven that we need these CDFIs in order to do what the topic of this panel is, invest in our community.
Yeah, the one other thing that I would add to that point is if you look at small businesses and their ability to grow, the CDFIs have been and the MDIs have been a critical part of this, but actually nationally speaking, the number one source of startup capital is usually your friends and family. The number two is your bank credit. And for minority owned small businesses, although still friends and family number one, and number two is your credit card, that makes the MDI CDFI solution really important because they're using capital that's not really primed for long-term growth. But going back to that first thing about your friends and family is your first source, that patient capital side of things, a big part of the reduction over time has actually been a part of the minority wealth degradation that's happened post-2008. We don't have a lot of wealth in African-American households or other minority households. I think there's a 10-to-1 gap between white and black households in the US. So how do you solve that? How do you get that patient equity capital? So I would say a big part of the need going forward is we also need to be looking at access to growth equity, venture capital, and those different sectors. Similarly, on the banking side, how important it is to have diverse financial institutions that are equitably deploying capital. On the growth equity side of things, we need to make sure that there are diverse asset managers out there. And that's a critical thing we cannot forget, because when we're talking about post-COVID, what we're going to need to make sure that Black businesses, minority-owned businesses have a piece of the American pie going forward is that they have all of the capital stack available to them, and democratizing financial institutions, not just the banking sector, but the growth equity asset management sector is going to be critical to that. Right now, entrepreneurs of color only get 1% of venture capital money. And a big part of the problem is that venture capital, other asset managers, they invest in what they know, what's in their backyard. And if we don't have enough diversity amongst asset managers looking for opportunity from HBCUs to other minority corridors, you're not going to be finding those growth opportunities that matter both from an investor's portfolio perspective as well as the community perspective. But I always then go back to the McKinsey analysis that said, look, the fact that we have this disaggregated access to capital in the community has left $1 to $1.6 trillion of economic value on the table. If we're able to actually find this opportunity, invest into it, that's 6% US GDP that could be ignited in a post-COVID economy. So this is not just a minority issue, this is an American issue that we need to make sure we solve.
And let me just add, jump on the back of Aaron's comments, which I absolutely agree with. Some additional numbers there. So first of all, there's absolutely a need to create more connectivity between the venture capital community, and Black entrepreneurs, and an additional number beyond the 1%, 0.06 of 1% goes to venture capital financing, goes to Black women-owned entrepreneur businesses. But after the financial crisis, TARP, the Troubled Asset Relief Program, only 1% of the asset management contracts went to Black asset managers, and it was written into TARP that they needed to have an eye toward and prioritize diverse asset managers, and it was done in a way that only yielded 1%, and even out of that 1%, when you break down the numbers, a lot of them were not actually managing the capital. They were sometimes added as some subcontractors in a way just to check the box and get them onto the contract. So in any event, there are a number of different places we need to look. And I think the biggest piece of this, and Aaron made the point, but something that we need to elevate in the conversation is, this is not charity for Black folks or charity for communities of color. This is a way to recover and improve the entire economy. When we have a more inclusive working economy, it is better for our growth. And we need to be thinking about every and all tools at our disposal right now when our economy is in free fall. And I think we can learn from the lessons of the past.
So I'll add to that, if you don't mind, David. The point is, what's the action that we can take as individuals? One, we've talked about awareness, engagement, and now the ownership piece is, what can each of us do? One, as I always say to all of our colleagues, we don't need all of your money. We need some of your money. And that doesn't matter if you're African-American, white, Asian, Hispanic, or Native American. And so that will allow us the opportunity to build out the infrastructure to grow, to hire now asset managers, which is a component that Aaron just talked about. So if we want to talk about inclusion and economic inclusion, we have to take action on that. But first of all, you have to do what? Water your own grass. And so we'll ask that all of those in the spirit of this conversation will participate and put some of your dollars in an African-American bank, which will allow us to have the voice now to ask others to do it in a way that will compound, support MDIs, and support CDFIs.
Thanks. Ted, I want to put you on the spot. What is JP Morgan doing to expand asset pools to communities of color?
So I think one of the areas that I wanted to build on and answer that question is to just understand just how big the opportunity is to drive capital in places where it doesn't yet get to. Only about 20% of Black businesses and enterprises even access any external financing. So there's 80% of the country's businesses that don't even touch or sniff access to external financing. And this opportunity exists now for us to partner in ways that brings together fintech, large banks, and MDIs, particularly in places where there's expertise that can be scaled. So I mentioned early in my remarks what the firm has done to partner with MDIs, particularly to scale opportunities to build capacity within MDIs, but then also use that as a blueprint to build even greater connection between larger banks and MDIs. This, I think, is how we move forward with building the capacity of organizations that are going to be sustainable financial institutions in the Black community, but then also create that scale potential where large banks can learn from that expertise and bring in some of those lessons to reach more people, even outside the Black community. One way to do that is to get more banks to participate in the Department of Treasury's Mentor Protege program. Another way is to understand what Black banks need in terms of capital, advisory support, and also technology to take us from transactions that are occurring manually to transactions that could be occurring at real scale with technology. And the other way is to ensure that other corporations are joining in this for the long term. Lisa mentioned what Netflix and Google and others have participated in with respect to MDIs and CDFIs. This needs to be an all hands on deck solution that's not just about any one institution, but how we all move together to ensure that these institutions are sustainable and that wealth is being generated in the Black community.
I'm so sorry, but this has been a tremendous discussion. We have run out of time, but I thank all of the panelists for their insights with respect to how we more effectively invest in communities and bring more capital and resources to these communities that have been traditionally underinvested in and is in need of significant support, especially during this time. Thank you all. Thank you, Congressman Meeks. I thank the Congressional Black Caucus Foundation for having us this afternoon. Thank you.
Thank you.
Thank you.